Morning, everybody. It's Chris from Serene Education with the 4 majors notes update for the 29th of March 2012. Hi guys, just going to be going over the 4 majors. As per usual, looking at the euro against US dollar to start with. Let's have a look and see what's been happening. Okay, yesterday, wow, spinning top, indecision. A lot of movement during the course of the day, however, closing very indecisive after this pullback. Pullback coming after we broke through the 13,300. Very strong support and resistance previously on this time frame, the daily time frame. And if I can just put that in and pull back, you'll be able to see exactly what it is that I can see. So resistance, breakout, a bit of support, then a failed break to the downside, then further resistance, and now we had a breakout and a pullback. Now yesterday's candle still trading lower than 13,300, no, not closing and trading lower, but moving higher and closing above, which is a good sign, because the longer it stays above 13,300, the more likely is we're going to have a bounce. And sure enough, on the Asian session this morning, we've seen a slight move to the upside. Not a hell of a lot to really talk about or get really excited about, but the most important thing is it's trading above 13,300. So as it maintains those levels above 13,300 on the daily, the more and more likely it looks like we're going to get that bounce higher. Okay, CTC is in our favor, and if this is our low, and this is the pullback candle here, down to the low here, you can see quite clearly that 100% would be just above the 1341.50 mark. That'll be our next target. 161.8 will take us back to the institution moving average. This is on our dailies, guys. So there's still room to move. At 100%, go for roughly the 134.50 mark, thereabouts. But you can see where the outlay is. So it's good. It's good what it's doing in the moment now, as long as it maintains above 13,300. Long term or weekly, we're still looking for price to continue to the upside. Here again, on our 4-hour chart, you can see pretty much that we saw a bit of action below the institution moving average. But since then, we've seen a bit of movement to the upside. Since the 26, we've had a nice punch to the upside, breakout, a pullback. Yesterday, a bit of indecision yesterday. Price trading lower, spinning top at the end of the 4-hour close, price bouncing higher, and now it's trying to find 20 period moving average, 50 and institution moving average all in line below price, helping this to the upside. And as long as it maintains these higher swings, higher swing, then price will preferably still look for longs. Very, very important. So maintain above 13,300, the more likely is we're going to look for potential long-term support and further upside to continue. So as it stands at the moment now, let's look at potentially overall the 134. The 134.50 is our first target. As we head up, CTC still remains blue across the board. Yes, we've had a lot of red in between, well, red arrows and a couple of red candles, but they're not breaking previous major support and resistance levels, and so there would have been no genuine selling sentiment creeping in. Okay, and as it stands out, trading over the last one today, the 61.8% from the highs, original highs here back in Feb, all the way down to the low. You can see prices pretty much making its way up to these price support and resistance levels, or fib lines, retracement lines, and now it's broken above the last one, which being the 61.8, and now we're looking for upside movements on the intraday time frame. Hourly chart, you can see 13,300 still below price, which is good. However, relative strength has dipped, which is okay. I mean, we are breaking above and we are pulling back. We have seen a pullback over the last couple of days. That remains to be seen. You can quite clearly see these highs reattempting falling lower. It's not a problem as long as it maintains above 13,300. Then we should see potentially more support being forged, forging a nice clear bottom here and then bouncing higher. The moment we start getting below the institution, the 13,300 mark, and we're trading below the institution, then you're going to start worrying that price might definitely be falling over. So as it remains to be seen. So as it stays above 13,300, the longer it maintains above 13,300, the more likely we're going to see price bouncing higher. Yesterday we had a clear break lower. However, that momentum fell to really rally on to the downside. And besides, we're trading to a very strong support and resistance. 50 period moving average sorry, the 50% line here, still price trading above it, so there was no signal for any downside trend. If you look at the overall upside trend, higher swings depicts upside movement I mentioned. You can quite clearly see, if I draw the trend line here, you can see that price yesterday on that breakout failed to close lower, and in doing so did not give us a genuine selling opportunity, and price bounced back up to the upside. So prices at the moment are still favoring higher highs, and as long as it maintains above 13,300, then the more likelihood is it's generally going to be playing out that way. Okay, sterling, let's have a look. Weekly chart, you can quite clearly see as we get edge towards the end of the week, you can see that price is testing this 1600 for the second time, and it's many in the last month. But you can see that 15,900 also prices has tested it, and for the first time, as many, you can see quite clearly that price is trading above it now. So a lot of momentum going into the latter part of this week, and as it stands now, the 50 period moving average as well as the 200 period moving average on our weekly has been tested. You can see these lower swings dictating price action to the downside. Swing lows dictating that price is edging lower, and we're coming to the squeeze now. Yeah, price has spent a lot of time going sideways here. Since February, you can see price has pretty much been consolidating sideways, and the 50 period and the institution moving average now are literally within grasp. So on this time frame, the weekly is still looking bullish. The CTC and everything's in our favor. However, that 1600 is still there. Very strong resistance level. Also a psychological round number, 1600. And we like to see that being breached. Got to see that being breached on a weekly to definitely confirm break of the institution and the 50, which would be a clear signal that bullish sentiment is definitely in favor now, because you can quite clearly see the institution moving average has been trading well above price since 2008 when we had the breakout downside, all that negative sentiment. So if we're getting here, for example, higher swings, swing higher, we're going to the squeeze pattern now. You can see price being squeezed between 2 points. It's got to give. Which way is it going to go? Still trading below the institution, so negative sentiment still in favor at the moment. But the moment you get that break above 1600 and close above it, will definitely confirm that sentiment is now looking favorable top side. And if that is the case, then for the foreseeable future, we could definitely see price rallying higher. 161 would definitely be on the cards. 161.50, and back up here to 164.50, and ultimately way up here at 167. So there's a lot of way to go in terms of targets to the upside for this pair, if and when we break above that very, very strong downside trend at 1600. That plays out on our daily. Quite clearly see a lot of hesitation at the institution before, and now for the first time we're seeing a lot more price action above the institution moving average, which is a clear sign that price is still favoring higher highs, and long may it last, because the longer it spends above 15,900, the more likely is we're going to get a real reattempt of 1600, which is clearly an area we need to see price breaking above and trading higher long term to definitely give us an outlook for the foreseeable future. So if we can get a definite break higher, it'll definitely confirm that price is still favoring upside, and if that's the case, then we're going to start seeing more people purchasing this pair and then moving it higher swing, and now you can see prices back towards the trend line, and could we see a bounce higher now because of that? Let's see. Okay, so shooting star above here at 1600, price pulled back to the 15,900. Didn't close higher, but on the Asian session last night, the open, we saw price moving higher, and as it stands at the moment now, trading higher than 15,900. It's got to close. A nice bullish engulfing here would definitely confirm this now as a breakout pullback and then a continuation. If we don't see a close above here in price during the course of today, pulls and rallies and closes lower than 15,900, then we're clearly seeing a resistance, like a breakout, a slight consolidation to the underside of 15,900, and then price should retest the 15,850, the institution moving average. We've been there before. See, yesterday we tried all the way down to there, and then price pulled back, and then back to the downside again. So it's important, it's very, very imperative that price actually maintains these highs above 15,900 to still look potentially long-term bullish. Failure to do so would see price consolidating back towards ideally the to the lower part here, 23.6 of the initial the retracement, which would take us back to just below the 15,800 mark. 38.2 would take us back to 15,700, which is also a long-term support and resistance level. 15 back to the prior move to the upside here at 1561, 6200, 61.8 down here at 1554, 53 if I'm not mistaken, and there's a lot of clean air below the 61.8 back down towards 100. So imperative that we see price continue to maintain above the institutional moving average, because as long as it does that, it's still looking favorable long. So very, very important. US dollar Swiss franc is next. Let's have a look. Weekly outlook is still looking bearish at the moment. Now we're still pushing lower after this exhaustion candle here a couple of weeks ago. CTC still remains negative. We are trading below the 20-period moving average yet again, and the 50 could potentially be back on as our first target. The daily time frame, you can see these lows, and you can see the high here previously. We had a slight move to the downside. Then, oops, apologies. This is not exactly what I wanted to do. Let's do that again. So the high here, down to this low, back up to this high, and you can see the 61.8 here, still acting as a strong bottom support at 90.20 if I'm not mistaken. Okay, a lot of indecision here. Yesterday's candle, very indecisive, spinning top, or doji, apologies, at this level here, the 61.8. A break of 61.8 definitely would see 100% at the, which takes us back to the prior lows as our first target. But we've got to see a break of 90.20 in order to see that. So bearishness creeping in the Asian session last night. CTC is in our favor. 20 and 50 is above price as we are swinging lower. There we go. You can see from these highs here, prior high, start of this swing low, and our price is testing that potential trend line, downtrend. So we get a nice bearish engulfing here. We'll definitely confirm that price is looking favorable for further downside, moving to at least back to 100%. Would take us thereabouts to the 8950 mark in particular, and not too far from where the institution moving average is. But as you can quite clearly see, price is looking potentially more negative at the moment. In the 4 hour, you can quite clearly see that trading below all the moving averages, and you can see price over the last couple of hours has been trading sideways. A lot of indecision here. We'd like to see a break below 920 in order to confirm that definitely is still negative sentiment in here, and if that's the case, then ultimately our first target would be back down here towards the 8950 mark, which is quite a way away from where price is trading. So a nice little trade to the downside if and when price decides to give us or play her hand. Trend line, swing low, swing low, swing low, a lot of swings, all dictating downside moving. All the moving averages above price, and the CCC most importantly is still red above across the board. Only need a break below 9020 in order to definitely confirm that price is still looking bearish sentiment wise overall, and we should be looking at 895 as our first target. Hourly, you can see there we go, 920, 9020. Okay, institution moving average still above price. RSI is still trading below 50. Okay, so that means that sentiment is still favoring downside. The trend direction is still negative overall, and that's depicted. Both the 20 and 50 period moving averages are consolidating, so it's telling you that sentiment is consolidative, and you can quite clearly see that price is in a consolidated range, not trading higher than a previous support, which happens to be a resistance, a new resistance, and price is now, as we speak, moving lower. So we need a break below 902 for a definite entry. Nice bearish engulfing to the downside to look at potentially 989 as our first target for the day. RSI has pulled back in this consolidated range, which happens if you're trading against a very strong support, which is not the problem, as long as it maintains below 50 though. So we can still see positive consolidation. Yes, that's got to happen. And now we want to see a break lower, and this RSI is going to trade lower ideally than the prior swing higher, which happens this reattempt here. If that does, then it's telling you that sentiment is genuinely negative, and we should be looking for a definite short to the downside. Last pair of the day is US dollar Japanese yen. You can see price is still favoring downside movement after this failed attempt of breaking 8400, which happened to be a very strong support and resistance level over the past couple months. So a failed attempt twice into 8400, which happened to be a very long support and resistance level going way back on our weekly in particular. So failed attempt over a number of period occasions. A nice little engulfing, bearish engulfing at a resistance level. Price maintained those breaks to the downside, and she made her way back down to price support and resistance here. And if I plot this is the low all the way to the high here, you can see that 23.6 was that bounce area, traded into it, and then we saw a nice bullish engulfing, and then price moved higher. That failed to really take off because of the sentiment was still negative. And if I just plot another one, you can see that 23.6, which happened to be the underside of price support, was the resistance level in this case. Yesterday's bearish engulfing, literally engulfing yesterday, not moving any higher than that, confirmed that sentiment was still negative. And this morning, starting the Asian session, we've seen price reverting to the downside. Back towards the first port of call would be the 23.6 or the 23.6 here. So a lot of hesitation. There's a lot of the 50 and the 23 all in here. So this is a very strong support area. You can see we had a bounce before. Ideally, this is to be still negative sentiment. We do need to genuinely see a break of 20 moving average. However, got to see a break lower than this area here of consolidation. The longer it takes to break this, the more likely is we're going to have a bounce, and the more likely is we're going to have a reattempt of those highs at 8,400. So we could see price pretty much consolidating in this range. So very, very important that we do get a break and close lower. Apologies. At least below the 8,200. If that's the case, then we should see price really rolling over and going back towards the 8,100. The 80 here, 61.8 down towards the 670. So lots of movement if and when we get a break of this price swing. So this failure here is now made a new downside swing. Okay, you can see that price is now being squeezed between both a very strong support and this lower swing. Yeah, so we're going to this consolidative range. Anything that you can have. We can either have a nice bounce, a correction back up towards 84, or we could have a nice breakout lower, pullback, and then a continuation in the downside trend back towards 81 and 800 overall. So let's have a look at the intraday. You can see quite clearly that 23.6 is just below us. CTC has got two parts of a 4-part strategy yet, so we've still got to wait. By that time, 20 and 50 period moving average above price acting as resistance. Trend line is down. You can quite clearly see that from the highs that we saw at 8,400. So as it stands now, sentiment is looking favorable, negative, and as long as 23.6 stays in check, then we're looking at a very strong support here. Very, very important. We've got to wait to see if that's breached first. As I mentioned, we don't want to be second guessing the market. We've got to see a nice break of this level here, 23.6. A break of that would generally confirm that we should be looking at down at 81 as our potential target long term. We don't want to see this happen where price is trading below for a long period of time, and then 4 hours later it's back up above and support is confirmed because it becomes a nice hammer, indecision hammer, but it's still trading above, so it's telling you the sentiment is still favoring upside or buying contracts, and sure enough people buy that. Bullish engulfing is what we wanted, and then we should see price back up towards the 23.6, which have new price support over here of this move, and then that would have been your first target. So it's very important that we do get a break lower than this, otherwise we're just going to be bullish consolidative until the institution moving average catches up with price. That's it, guys. That's all that is for today. Hope you have a fantastic trading day. Just ensure that you have a look at the market to see if there's any news out today. Seems to be a hell of a lot of news on the US session. A bit on sterling. We have a lot of speakers. Figures this morning, 7 a.m. GMT nationwide HPMI month-on-month figures. House prices fell. They were expecting a 0.3% forecast. The previous figure was 0.4, so they're expecting a better forecast, and it came out at -1. So very, very negative for the year for sterling, which is not good. What else do we have? We have German unemployment change. That's going to be quite an interesting one. Previous figure was no change, 0,000. The forecast is for a -10,000 for unemployment. If that comes out higher than that, that'll definitely show conviction that euro is still very much negative. If it gets lower than that, it's going to be bode well for euros overall. We have net lending individuals month on month. That's slightly less. They're expecting a less forecast of lending. US unemployment claims, that's going to be the big one to watch for this afternoon. Previous figure was 348,000. They're expecting a unemployment forecast of 351. So there's a change there. So if the figure comes out less than the previous, so the forecast, so if the price comes out and it's less than the forecast, it's going to be good for the currency. So anything less than 351 will be great. If it's higher than 351, then it's going to act. It's just going to really confirm that the U.S. market, as Bernanke potentially mentioned, that things are taking a little longer than normal to pull through. Other than that, hope you have a fantastic trading day. Keep it simple as I mentioned, and I'll see you first thing tomorrow morning. Until then, trade serenely.